Live from Music City, Nashville, Tennessee, this is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of the Real Life Stock Review. This is Monday, ladies and gentlemen, I've done absolutely fantastic. Monday, the 10th of April, 2017. Remember, April is Surprise Yourself month here at Real Life Trading. Still looking for someone to send me a video of them doing that recording that I just did, or just emailing me an intro that you want me to do. Either one, I'm game for if you are. Here's the SPY and an interesting candle today. Today's candle looks exactly like yesterday's candle, yesterday being Friday, of course. So if we look at those really quick, here's that candle, here's those two candles, very, very similar. A lot of indecision is pretty much what we got. So here's my note that I wrote on Friday in the afternoon. Looking for Monday, Tuesday to bounce bullish. So we got one more day. If we don't, sideways to neutral until the 100 simple moving average comes up. So here's the 100 simple moving average. It's at 229.54 right now. So pretty much that's just me saying that likely we'll do something like this until the 100 simple trades higher and presses the action up some. That's just my guess, but bullish to neutral is definitely a good market environment for credit spreads, bull put spreads, or if you own shares, you could also consider some covered calls. The weekly chart on the SPY looks pretty good. Here's your exponential moving averages on the weekly chart. If I hide all these drawings here for a second, you'll notice right now it's an inside day week, at least from last week. So we got an inside day week. We're doing our thing. It's going to be interesting to see what's going on. Ladies and gentlemen, big news, something you got to know. Earnings season is here officially. There's going to be stocks gapping everywhere this week, and next week it's starting. So we're going to look at some of the stocks that are going to be gapping over earnings season. Gapping season is great for the day traders of the world and for the option traders of the world. So make sure, if you're not, go ahead and hop over to reallifetrading.com and take a piece of this weekly options newsletter right here. Go to premium and click on the weekly options newsletter, because that is going to be something that will likely feature a lot of these stocks that are gapping over earnings. So something to keep in mind. Back over to the SPY. Let's look at some of these stocks that were requested. Matt wanted to look at WFT, Amazon, and Netflix. So let's go look at WFT. Weatherford. Ticker symbol WFT. Here's the weekly chart. I'm just looking at the weekly chart. I don't look at Weatherford all that often. The good news is on the weekly chart, you are above the 50 exponential on the weekly, and you had a bullish gap action. Bullish gap and go about 2 weeks ago, and that occurred on a Monday. So pretty strong gap, if I do say so myself, and I do because I just did. Here's the daily chart. You're above all the moving averages. Some pretty good volume came in today. So I like the gap up. Not saying it's going to work, but Weatherford usually on average just kind of grinds higher over time anyway. It's a very, very choppy stock, at least recently. That trends okay, but only for certain time periods, and then just kind of chops around. So nice little accumulation phase for sure. Again, if we come back out to the weekly and we put this line chart on, you'll see that there's a really, really strong support on ticker symbol WFT down in this area. We got one support level right about here, and then we got one that was really far away that we didn't quite make it to, and then we got the one that we're interacting with right now. So overall, WFT looks good. It's just an accumulation pattern. There are some analysts out there looking at this. Could be an inverted head and shoulders pattern. Longer term, I agree on that. Shorter term, it's probably just going to keep chopping around, trading sideways. Amazon, congrats for those who played this one bullish. So here's Amazon on the daily chart. I do have a new wager on Amazon. My wager is that Amazon's going to hit 1,000. So if I turn my lines on Amazon here, today was a beautiful bullish gap and go on the daily chart. So we got a really nice, zooming in here a little bit, get a good bearish candle. We didn't quite pull back to the 10 exponential, but that's what I wanted. We got very, very close. I mean, pennies away on Friday. And that was kind of my note Friday morning, was look to buy the dip off the 10. So I'm unfortunately not in on Amazon. Didn't quite make it, but some traders did. So if you are in on Amazon, awesome. Bull put spreads, put sales, all the like look good. Earnings are right around the corner. If you want kind of my chart and analysis on Amazon, here's what it is. But this is a weekly time frame. And on a weekly chart, you have this beautiful, beautiful, classic breakout of the all-time high, retest of the previous old resistance, new support, and then a bounce. So Amazon, definitely a bullish trend. If you're looking at playing it, I wouldn't specifically be bearish at any point on Amazon. So here is my new analysis, my wager. I think the target is my wager on Amazon. I'm looking for it to go above $1,000 a share or a stock split before January 1st, 2018. And if that does not happen, I will buy a random person, someone who's on the trading floor, a Amazon Prime subscription, and I'll buy something random on Amazon and have it delivered to a deserving person or charity. So that's going to be kind of the wager on Amazon that it hits 1,000 this year. And I think that's more than likely the case. Let's look at Netflix. Netflix, ladies and gentlemen, has earnings next Monday, if I'm not mistaken. And Netflix, a lot of people are watching Netflix today. Shout outs to Frank Doyle, who did some amazing analysis on Netflix just last night, looking for it to break this support on the hourly chart, trade down into the 50 and bounce. Also, shout outs to my good buddy Justin J up there in Boston. He was looking at playing Netflix bullish and missed it by an entire dime. Sorry about that, man. Great try, though. You nailed the analysis. Just trade right down to the 50. So for those who are playing it for this week, I think one of my good friends, Kevin Toole, is looking at Netflix as a bullish bull put spread of some kind. I agree on that. Bull put spread potentially as well. Just keep in mind, earnings is next week. Personally, I don't mind owning 100 shares of Netflix at 125. For anyone who wants to do a put sale, it's pretty far away. I don't like, I'm not a huge fan of how they changed the rating system on Netflix from a rating system to more of a, what was it, like a percentage match or how close you would like this more than likely kind of thing. So I don't know. We'll see. That's going to be kind of interesting. But anyway, Netflix, if it gaps down on earnings, which I think it will, I'll be looking to buy the dip on Netflix. Now, of course, it could easily gap up. I am bullish on the trend. Just keep an eye on Netflix and watch it to continue long later. One of my good new trading, real life traders over in India has a nice little following. His name is Prashant. Hope I'm pronouncing that right. He requested on Twitter INFY. So let's go look at INFY. And this is an interesting trade today because on a weekly time frame, we're retesting the neckline of a double bottom. So I don't have any position on this particular stock myself, but just looking at it, we can see that this stock does like to retest its double bottoms. I can give you a few examples recently. So again, this is a weekly chart, and I'll draw a few double bottoms. Here's double bottom number 1, broke out, retest, continued higher. Here's double bottom number 2, broke out. Here's the retest, continued higher. Here's kind of an inverted head and shoulders. Kind of an inverted head and shoulders. Here's another double bottom, broke out, retested, continued higher. So right now we got a double bottom, broke out, and we are retesting at old support, new resistance as we speak on INFY. I don't see anything super alluring shorter term, but longer term, if you're looking at playing INFY, if you are going to look at this daily chart, based on the candles, it was a pretty decent gap today, but the gap did get bought up, and here's the support right here. Very nice little support level. So earnings right around the corner on INFY. If that support level breaks lower, very good chance INFY is going to head down to the low 13s. If it doesn't over earnings, I think it continues to go higher. Here is Tata Motors, ticker symbol TTM. And Tata Motors, going to look at this one also on a weekly charts and just kind of zoom out. You'll also notice another really nice double bottom on this trade. So really zooming out here to get just kind of a bigger perspective of what's going on. And what we'll notice is a really interesting support resistance level on Tata right around here, this $30 level. So this was also a really good double bottom. You had a gap action. It was a retest gap, in fact. White candle, you see there, retest gap. So we gapped up. Here's the short retest and bounce. And then here's the longer retest and bounce. So we've done this a time or two. So really, really good support action in there. Also, we have a little bit of lower highs coming in right here and some higher lows. So it looks like some pressure is building. Now I'm going to hop over here to the daily chart and put on the long-term moving averages. Looking at those, we did have a nice little 1.3% move higher today. So here is the 100 simple moving average on TTM, and we're just kind of stuck right in the middle of those two. So for me personally, I have two places I would like to buy TTM. If it comes back down to 32, which would be a gift, I don't know if it makes it back down there, or wait for it to break out of this pennant pattern right here. If we can break out of that, retest around 37 and then buy the dip on the pullback. That's how I look to play TTM. Otherwise, it's going to probably chop around a little bit longer. I will put that one on the list for Transportation Thursday. As a note, Friday the market is closed, just as a reminder. So if you're looking at getting in a request, let's do that Wednesday. Otherwise, I'll have to put that on the list until Monday. Another request was RDY. We have a lot of them today, so we're going to keep moving. RDY, Dr. Reddy's Labs Limited. And again, I'm going to come out here to a weekly chart just because I don't look at this stock all that often. But I will notice that there is a little bit of a support where we are located right now. So let me see if I can draw. Here's one support level, and we're there. Very nice. So previous resistance back in 2011. A little bit of resistance there, a little bit of a support there, a little bit of a support there, a little bit of a support there. So this $40 price range looks like a decent buy low, sell high type of price. Here's the daily chart. And again, the stock does gap relatively often. Makes sense. It's an ADR, American Depository Receipt, so it gaps fairly frequently. So looking at this particular trade, we got a nice bearish gap and go right here. And that gap is now filled. Today, a little bit of a bearish candle. So personally, I'd be looking for this to pull down to about the 39.50 mark and see if we can make this kind of inverted head and shoulders level. And that would be where I would look to buy low, sell high, this thing right here. Boom, there's another request on MOMO and First Solar. So here's MOMO. One of my good friends, Bob, loves trading this particular stock. I love the technicals on this thing. It had another flawless bullish gap and go right there. So MOMO, sky's the limit. Volume going bananas. It's an all-time high breakout after 3 white candles in a row. So very simple to play. Here's your old resistance. Buy the dip. Old resistance becomes new support. Buy the retest on MOMO. First Solar, FSLR, also up 4.3% today. Shout out to my buddy Peter over there in Australia. Actually, I think he's in Afghanistan right now, but he's from Australia. Either way, Peter, you rock. First Solar, he did a good day trade on this one today. Here's the weekly chart on First Solar. What I want to do is just blow your minds a little bit and kind of give you the analysis that we looked at on First Solar recently. This 25.14 is a support on First Solar. We got very, very close to it. Here is that 25.14 support, previous resistance, previous support right there, and we got 3 or 4 pennies away. So from here, looks like a retest will come in, and if it does retest, just based on the presidential consensus, I don't think First Solar is going to be much of a winner this particular next 2-3 years. And keep in mind, it's not really saying that from a Republican or Democrat standpoint. I mean, look, it tanked 2010, 2011, 2012 when Obama was in office. And then it kind of rallied a little bit, and then it's kind of tanking again. Ultimately, I think it's going to make it back to 1120, but before that happens, we'll probably get a little bit of retest. So here's my analysis on First Solar back in January, so over 4 months ago. I mentioned likely that it would break down, retest, and either roll lower or break out, which was the purple line. So you'll notice that's exactly what it did. It broke down right here, retested, and now we're getting that rotation lower. So expecting another retest and then probably another trade down. So on First Solar, shorter term, very, very short term, like hours to days, I'm a little bit more bullish than bearish as it's breaking that support level on First Solar. Keep in mind or keep an eye out or watch for this to retest old support as new resistance. So at this point, looking for some longer term puts as First Solar retests this $30 price range. If you want to consider some longer term puts, they won't be massively expensive on First Solar. Let's go look at some SPWR. I believe it was SunPower Corporation. Very nice candle that came in today. Very, very nice. So good volume, great support right here. In fact, I'm going to put this on the list for the afternoon swing trading floor that starts in about 23 minutes. Really, really good candle, great volume, and it's at a nice little support baseline. So really what you want to do from this one is zoom in probably to an hourly chart and just look to for a location to buy the dip. So here's the hourly, here's the exponential moving averages. Had a good breakout, so you're probably looking at around $6.65 to buy that dip. And then from there, you try to find out where your next target is. Ooh, shoot, we traded right to it today. 100 simple. Well, we did break above it back here in February, so maybe we can do it again. So that puts a little bit of a damper on my analysis of it breaking out. So let me see if it can pull back for the next 2 or 3 days and then break above. Then from there, next target might be the 200. Either way, it's at least a good one to keep an eye out for. And last but not least, I had Lauren. I hope I'm pronouncing that correct. She asked for some bank stocks. So here's a bank stock that I'm watching is Deutsche Bank. And Deutsche Bank has been in a channel for a while. Here's a weekly time frame. And on the weekly chart, two things. It does look a little inverted head and shoulder-ish. I don't know if that's going to happen or not, but kind of a bigger picture inverted head and shoulders. So if it breaks above this resistance, I'll go long. Otherwise, it probably looks to me a little bit like a channel. And it has been breaking down with some bearish volume. So if it trades back down to 13, I'll be looking to buy low, sell high on Deutsche Bank. It's not like Deutsche Bank's going to go out of business anytime soon. And if it does, we're going to have bigger concerns than who's going to win Dancing on the Stars. So that's pretty much Deutsche Bank, looking to buy low, sell high. JP Morgan and some of the other banks coming out with earnings this week, ladies and gentlemen. JP Morgan, absolutely going to be an interesting one because it is hanging out right here on the 100 simple moving average. So earnings this week, pretty simple. If we gap down into this range right here, I'm going to be a little bit bearish for the day trading world. If we gap down below here, I'm also going to be a little bit bearish on JP Morgan. Again, keep in mind, financials have already had a massive run up since September and October, and of course November, and really at this point are consolidating. So any financials that you're looking at, keep in mind, this is a great standpoint to buy low, sell high. Very similar to Bank of America, just chilling right on that 100 simple moving average. So a lot of them are going to determine on earnings, are they going to double bottom off the 100? Or they're going to trade back down to this support like Bank of America down here and then bounce, which makes the most sense to me. Or are we going to continue higher, gap up really nicely on earnings? That's probably the most least likely situation. It's always possible, of course. But Bank of America, Morgan Stanley's below its 100 simple moving average. And then Wells Fargo is just really chopping around, also below the 100 simple. So these notes on Wells Fargo, a little bit of selling coming in right now in Wells Fargo. So bottom line is, if we do get a really nice gap on these bank stocks, I would expect that to be a pretty powerful gap. Otherwise, look to draw some support on your financials and buy them as they pull back because they've already had a massive run and now they're consolidating, which is good, but they are at some supports right now. So just keep an eye out for them and determine how long term you want to buy these suckers and then play it accordingly that way. Ladies and gentlemen, was a nice long review. Had a lot of requests. Thanks so much for doing it. I really appreciate it. The next real life stock review is coming at you on Wednesday. And until then, remember, love life, live life, and trade it. You guys rock. Bye-bye.